But let's be clear, as a bit of a disclaimer, when we talk big ideas, we're not talking silver bullets. You know, we've all been in this industry long enough to know that we search for the silver bullet for 30, 40 years, and it's simply too complex a sector to find the silver bullet, be it on the technology side, the business model side. I believe that it doesn't exist. But I think what we hope to do is to lay a bit of a framework for the rest of the day's discussion, where we'll get into some of the granularities of the different models out there, and to talk about some of the emerging models that may be working at a smaller scale that can be scaled up, and some of the new ideas out there that can drive the sector in the next several years. So let me start. You can find full bios for all of our panel participants in your program, but I'll give a brief introduction. To my left is Maarten Boute, and welcome, Maarten. Maarten is currently senior advisor at Digicel in Haiti, and founder and president of Revolt in Haiti, a clean energy company. Before this, Maarten was CEO of Digicel from 2009 to 2012, and worked extensively in the telecom sector before the gig at Digicel. To my right, Carl Pope. Carl is currently the principal of Inside Straight Strategies, a consultancy focused on the nexus of sustainability and economic development. And of course, prior to that, Carl was chairman and executive director of the Sierra Club for 19 years. Is that correct? And all the way to my left, Megan Rapp, my colleague from USAID's Office of Development Credit, where she designs and structures credit guarantees primarily in West Africa. Before coming to USAID, Megan worked in Haiti with UNEP on an improved cook stoves program. So welcome all, and thanks for joining us. So Maarten, let me start with you. When most people think big in terms of a technology that has penetrated the rural pyramid and done on a primarily commercial basis, we think of cell phones. And you had the courage from your perch atop the cell phone industry in Haiti to jump off the cliff and start a renewable energy company. And I was curious, what were some of the market signals that you saw out there that made this an attractive proposition? And have you been able to take any of the big ideas from the telecom industry, either on the distribution side or the financing, to as you've either developed or refined your business model at Revolt? So maybe you can tell us a bit about that business model and how your experience has helped to formulate it.
Okay. That's a big question. That's a long question. Yes. So when I got to Digicel was primarily focusing on the main cities and the rural cities and towns. And when I got there and I was traveling around the country and saying, but there's all these other people up in the hills and in other parts of the country that aren't covered yet. So one of the first things, I think it was the second or third board meeting I went to, is I presented a plan to go and invest extensively into the rural areas. So we invested about $160 to $200 million, getting much more coverage in those rural areas. What we realized then is a few things. We knew that people have less income, so we had to subsidize our phones more. That was one of the key things we had, so we had to get the barrier to entry even lower than we had to in the cities. The second thing was that as we started, we're very good at selling top-up, we're very good at selling SIM cards and phones, but soon we realized that phones were just switching off strangely in the middle of the day. You know, what was going on there? We knew there was a power issue, but we didn't know it was as bad as that. So that was when the energy thing started sort of playing around in my head. So the first thing we did is we rolled out roughly 800 remote charging stations. What it basically was is women managing either a solar-powered or a unit that was next to our cell site, which is this 18-plug solar-powered DC called our station, where people would come and charge their phones, pay a small amount. Can you not hear me?
Yeah, sorry, we're just going to.
Yeah. I can speak louder as well, but it's not going to be.
Here, let me try.
Thank you. And as we
Thank you. That's no problem. Do you want me to start again? It's okay, thanks. So as we rolled those out, we saw that it had some effect to our number of users coming back online and not falling off during the day. But we quickly realized that it was only like a drop in the ocean. You know, it wouldn't be enough to really address the problem completely. So that's one key element which sort of led me looking in that direction. Another thing we were working on is we were doing a due diligence on the utility there. So there's a very poorly performing utility in Haiti called EDH. It's not a criticism; they know it themselves. They say it themselves, so that I'm not stepping on any toes. Because they were looking at privatizing that entity, and as Digicel's a big company there, we thought it might be a logical step to get into the energy business and take it forward. It was the utility. The due diligence was very interesting. The conclusion was quite clear: is like just stay away from it unless you're the World Bank or you have $10 billion sitting somewhere, which you can almost throw at it. And I'm exaggerating a little bit, but that's not something you should do. Second thing I realized doing that is that even if we would work or take over that utility, service the main towns, we would still have an issue in the rural areas, which is something Susan mentioned earlier as well when she was speaking about that. So we stepped away from that. What was left then is saying, okay, listen, let's focus on getting a solution out there. So I went through the whole route. Everybody went through here. Let's look at solar home systems. Let's look at small energy products. You know, how can we finance them? How can it work? None of it was really like seemed to work. And then thanks to the GSMA in 2012, I met the people from Econet Solar, who were one of the pioneers at the time. At the time, it was still 819.com, which I've just heard today became Azuri. That were doing the similar projects in that sort of area. I was very interested by that. At that time, the quality of the units weren't right. The model seemed a bit strange. So we came back and thought a bit more, and then we said, what we want to do is build an off-grid utility. We want to be able to start off with the mass market, with the similar units like you'll see from Mzuri or from Angaza later on in the day. But we want to be able to own that customer, be in that customer's homes, and businesses. That's what I want to get to. Because we want to be able to, over time, we see that technology is moving fast. There's better batteries, there's better panels, there's better LED lights. The devices and appliances are getting more efficient as well. We want to be in that home so that we are ready to be with them within a year, 2 years, 3 years, 4 years, 10 years' time, to be able to scale up the units and go there. And very important as well, we want to move into the B2B part of the business. Because many of the businesses in Haiti suffer from I'm going to breathe. From high energy costs. And therefore, you know, either they don't operate or stop operating in the evening. There's huge issues with refrigeration. There's issues with refrigeration on transportation as well. And even entertainment. People don't have TV. They have these crank-up radios, but there's no TV. So there's a lot of opportunities there to start and scale up that unit to make it something more commercial. And I believe that the only way to do that is to be a real utility. And we have the same in the mobile business. We have a very large amount of prepaid customers, which give us, let's say, 80% of our revenues. But then we have a very much smaller amount of business customers, which give us 20%, which are much higher premium customers, which require like special plans and installations and whatever. And it's all a service. All the kit is ours, and we keep doing it that way. So that's, in a nutshell, how I got into this idea.
Well, I think a very concrete example of what Susan mentioned before, of starting actually from the end-use device and segueing into realizing that the energy supply. It seems as though there's a lot of excitement right now about different linkages with the telecom industry, be it pay-as-you-go models, using cell towers as anchor customers for microgrids, looking at some of the, as you've done, looking at some of the distribution networks for cell phones and saying, well, hey, you can't have a phone if you can't charge it. How far can we ride that? And it sounds as though you think you can segue from initially focusing on a single device like a cell phone into more complete solutions for the household.
Yeah, I think the GSMA is doing a really good job there actually with their mobile-enabled community services sort of work group, because what they're trying to do is make operators aware of this business, and my colleagues from the other companies will speak later. They will most probably confirm that the operators are not always very collaborative. For example, our unit has a SIM card in the box, the basic mass market unit. An operator around the world would charge $2-3 a month could upcharge up to $2-3. Digicel was charging $6 in Haiti a month for such a SIM card to be able to operate. That kills the business model because we're only looking at people that are spending $10, $12 a month. So that's one thing. The operators have started rolling out mobile money. They're not as successful as they are in Kenya or in Tanzania. This is a great way, by the way, for my colleagues. This is a great way to motivate the operator to get to do it because they're struggling there with their mobile money product. If you can join forces with them, and when while you set up your distribution or use their distribution, also register people for mobile money, get them on board, they will have a real service to be used on mobile money. Because one of the things that's hampering mobile money is why do I need it? You know, what is added value is there? Well, if you can buy energy with it, then maybe that's a nice added value you can get. So that's, there's things like that. Working off cell towers, I mean, we visited, or a colleague of mine visited OMC in India. They have an interesting model where they actually, basically they sell their host client is the operator, and then they try and charge lamps or lanterns for the villages and all that. It has some ideas. Most of the CTOs, mine included, didn't want anybody go near their cell sites because it's critical equipment. They want to have really reliable power, and they don't want to be mixing up something which is high availability, reliability with something that could be community oriented. And there's a big backlash risk as well, because if your cell tower goes down, not only does the power go down, not only does the cell signal go down, but your power goes down as well. So you're taking on a lot of weight there as a cell phone provider. But yes, I think that the GSMA is doing a great job there if they can keep educating operators around the world about what that means. And there's a lot of possibilities as well, because if you look at what we're doing and trying with Revolt is we can do cross promotions. So you can very easily say, top up your mobile this week and get a day off, a day free on Revolt, or buy a week of Revolt and I'll give you 50 minutes of credit on your phone. So it helps driving that usage in the beginning and picking it up.
Give you a second to rest.
Yes.
To Megan, the financing requirements to address the energy poverty problem are quite significant. And glance at the World Energy Outlook or any of the analyses would indicate that it's certainly not a problem that the public sector is going to solve alone. It's going to require a lot of private sector investment, but it's also not a problem the private sector is going to solve alone. I think that's important to acknowledge. Many years ago, we in the donor community took the philosophy as, the energy sector, the private sector can handle that, and it was a complete disaster. I think we're going to need innovative public-private partnership models here to drive private financial flows into the sector. And I was wondering if you could tell us a bit about what you do at DCA and how that model is working to de-risk some of these investments and drive financing into the sector.
Yeah, absolutely. Is this working okay? Yeah, okay, great. So as most of you probably know, most of what USAID does are grants and contracts. But we also have a loan guarantee program where we structure guarantees with private financial institutions to open up financing for certain sectors or segments of the market. And so as Jeff mentioned, I lead the development of all of our loan guarantees in West Africa, but I also have the pleasure of serving as our energy expert across Africa. And most of our portfolio is not in the energy space. We have a $3 billion portfolio of about 334 guarantees last time I checked, with hundreds of banks all over the world in 70 different countries, and a very small part of that is in energy. But what I think is really interesting for this group is within that small portion of our portfolio that's energy, it's probably our most innovative, most creative part of our portfolio. And it's actually, I think, the hardest one to aggregate. And I'll just share 4 different countries where we have some interesting guarantees that some of you in the room have been involved in, I think might be interesting for some of you to know as well, and also will show just the range of what we've done in the energy space. The first one we have in South Africa, we actually worked with some pension funds and institutional investors in South Africa to structure a $65 million bond guarantee for the institutional investors to be investing into a financial institution who would then be able to turn around long-term capital into the development of waste to energy projects, as well as some biomass generation companies as well. So we have that's South Africa. We have in Kenya, partner here, Acumen, we worked with in Kenya to do a $1 million loan guarantee. So we have $65 million all the way down to $1 million guarantee with Acumen Fund for them to finance M-Kopa. Some of you might be familiar with M-Kopa in Kenya. They have a pretty interesting leasing model that perhaps Acumen will talk about when it comes their turn as well. But working on trying to encourage leasing on a smaller scale. In Kenya, we also have what we worked with Nikki on is a really innovative transaction. It's $13 million facility, but it's structured in a way where we took 3 different microfinance institutions and basically set them up against themselves in kind of a competition model. And it's structured in a way where each of them have a different size facility that they're able to lend against for the clean energy sector. And then whichever of the 3 MFIs hits that target the fastest, they are allocated a separate $2 million facility at which they can lend against that. That's Kenya. The third country, just to note for you, also because you're in the room here, is we have a $2.5 million guarantee with Solar Now in Uganda, who I think is speaking later. So those are kind of our smaller ones, in Kenya and in Uganda, and then the larger ones in South Africa. And one final one, just to flag for you, is in India. We have it's actually USAID's, our office's first time doing a guarantee where we are actually guaranteeing the capital coming out of an investment fund. It's Nereus Capital, which is in India. The fund manager is Northern Lights, I think is the name of the manager. I think they're based here in New York, actually. And it's a $100 million facility for the investment fund to invest debt into various energy projects across India. And so you just kind of see that we have a range. The smallest I listed is $1 million. The largest is a $100 million facility. Smallest, and we've got projects being invested in under 1 megawatt up to the largest I think I've seen in our pipeline is greater than 20 megawatts. So we have a huge range. And so Jeff's question of what is our office trying to do? This is kind of currently what we're doing, and my role in our office has been to help us think through how do we increase our clean energy portfolio, and how do we find people in the space, either financiers, which is for us typically who we work with. We work with the financial institutions directly, but also finding businesses out there that are commercial and viable and bankable, and helping bring them up to scale. And so one thing, just to flag for you, so I don't forget it, because I also have to leave right at 5 o'clock when this is over. But if I don't get to meet any of you that might be interested in a guarantee, my email address is mrapp@USAID. That's a secret trick about USAID. Most of our email addresses are the first initial of our first name and our last name, unless your name is John, Smith, which is. But so I'm totally open. If any of you, if I don't get to meet you, please shoot me an email if you are a financial institution that is interested in a risk mitigant such as a guarantee, or if you are a business that really struggles accessing local capital. I'm always happy, and actually I really love talking to people that have ideas and helping them bring them up. So that's just kind of a smattering of what we're doing in the clean energy space that I think might be interesting to you all.
Thanks. And looking forward, just on the theme of big ideas, you and I brainstormed a bit about some of the unique challenges in the energy sector. Are there any large pools of capital out there that you're thinking about targeting with specific products, or what's some of your thinking along those lines? And then also, have you found that additional resources are required besides a risk guarantee to make some of these projects successful? Maybe you could tell us a bit more about that.
Yeah, absolutely. I think your second part of the question, additional resources, all the time. We always need, people who understand the market. I just was speaking with Rachenda next to me saying, we're trying to structure something new. I need someone to help me actually kind of right size a facility. And we're always looking for resources, whether it's human capital or money, of course, but more importantly, making sure that we're doing investments that make sense for there she comes, for the market. I just said we were just chatting before. Anyways, but as far as kind of the big ideas of where my office has been thinking, where we're trying to put some more kind of strategic thought around investing in the clean energy space, maybe I'll just flag there's 4 kind of themes where we're putting a lot of our thoughts into right now, and then a 5th one which is just focused on Africa. But one thing that we see as a huge constraint when I work with energy companies is access to long-term capital. I work mostly with banks, but as you all probably know far more than I do, accessing capital longer than 5 years in Africa is extremely challenging, let alone sometimes it's even longer than 12-month, 24-month revolving funds. And so one thing that we're working on is trying to do more of the facilities like the one that I mentioned in South Africa, where we are actually mobilizing pension fund capital, institutional investment fund capital into funds or into banks or into MFIs or companies that can then put the actual long-term capital needed into some of these projects. And Nigeria is kind of the obvious humongous pension fund capital market right now that we're doing quite a lot of work with to help the Pension Fund Association, the PFA of Nigeria, open up some of their longer-term capital into these energy investments. The second theme, just to note, that we've been thinking about a lot is leasing. We see, I know West Africa much better than I know the rest of Africa, but in West Africa, most of the leasing companies, if not maybe there's one or two that don't fit in this category, their principal business is automobile leases. And so I've been doing some work with them on helping increase their activities in sectors like agriculture, and have started some conversations on renewable energy leasing. And is there opportunities that we can both help grow some of these leasing companies that want to expand into different renewable energy technologies, as well as help companies like the Acumen Investment and COPA, who are using on the consumer side, using leasing in a more creative way. And it's kind of the second kind of big thought we've been thinking about. The third, just a note for you all, is kind of taps into what Jeff's question was on strategic partnerships. We, across Africa and across the world, there's so many multinational corporations, MNCs, jumping up everywhere. And so, is there a way that we can partner with them, get them to finance some of this investment, get them to bring some of their technology in? We've been talking with GE, for example, about what kind of ideas they might have to bring different energy technologies into the markets. And so yeah, I think there's opportunities to share risk with other donors, with other foundations. We've one thing that I really enjoy doing is when I go into a country, trying to meet with everyone who might be interested in this space, foundations, other donors, private sector, to try to find out how are there ways that we can pool our resources and do something that's more scalable and more impactful, and not always be working in our silos, which unfortunately is sometimes easier to do. And so yeah, I think those are some things kind of globally. And then on the Africa side, I'm sure many of you in the room have heard of Obama's new initiative, the Power Africa, which he launched in Ethiopia over the summer. And so Power Africa is an inter-U.S. government effort to work on electricity access across Africa, and certainly much bigger than my office and much bigger than USAID. But one component of it, which probably interests you all the most, is looking at small-scale distributed energy, whether it's off-grid, whether it's mini-grid, what that looks like. And we've been putting some thought together of scaling facilities. Where are there opportunities where we can take businesses that are working, we can help them develop franchise models, we can help them scale in other creative ways, but trying to take those businesses that have worked, are profitable, or are on the way to turning profitable, or some type of positive cash flow effort going on there, and helping scale them up to other countries within the region. And so those are just some things just to flag for you that we've been really thinking about. But also I look forward to, this is what I always try to do, is think about what's happening in the market. So I look forward, throughout the day, if there are things that you all see as the big ideas, as the issues that we're not thinking about, or where you see a huge need or a huge constraint, make sure to note it, because I'm going to be rigorously taking notes throughout the day from what you all are saying as well.
Super. And last question, and this can hopefully spill over to the next session, the financing session, but I think the perception out there is that this sector is high risk and low return. And while I can think of, from my personal experience, waging some money on a high risk, high return investment, high risk, low return is not very attractive. So
yeah.
my question for you is, how accurate is that perception? And if it is accurate, if it isn't, what are some additional models that we can use to either reduce perceived risk or real risk or increase return in this sector? And again, don't feel like you have to tackle that entire question, because I think the next session might touch on that as well.
Yeah, I guess just from our perspective, so we all of our data is actually open source, so you all can Google DCA map and it will all come up. You can see everything we're doing. But From our data perspective, we have hundreds and hundreds and hundreds of data points of borrowers that we have, and what we have actually found, and we've been in intense discussions with the OMB, which is the U.S. Government Management and Budget Office, about this, but we have extremely low default rates. This is what we see. We provision relatively high for our guarantees compared to what we actually see in reality. Out of our $3 billion portfolio in solely developing countries, what would you guess our default rate is? We're doing high risk investments in the middle, the missing middle. What would you guess? This part is interactive. What'd you say? 4%? 2%? 1999. It's a really great question. We were right in the middle of the financial crisis. 10%? Well, my 2% friend is the closest. We are 1.67%. I just checked it yesterday. And within that, that's our global, so that includes all of our sectors. But the energy space, we actually haven't had any defaults in our energy space yet, which is interesting, which is also, I will caveat that to say that can be really misleading, right? That could mean our bank partners are just investing in the most conservative, no-fail projects. So that's just a comment. But we actually see in reality that we have really low defaults from a debt perspective, which is interesting. Do I think that clean energy is a low-risk sector? No, that's why we're there helping it. I think it's definitely a high risk, but I think there are a lot of projects out there that often get overlooked because maybe the bank doesn't understand the technology. And this is I would say 9 times out of 10, this is what an African banker will say to me is, yeah, energy is important, but we don't get the technology. I don't know how it works. I don't understand how it works. And so this is something that I think there's I don't know what that exact sweet spot is, but I definitely think there's a higher perceptive of risk than there is in the actual reality of the market. Jeff's question on what are some risk mitigants or what do we do? I mean, my office does loan guarantees. We're certainly not the only one doing loan guarantees. Tons of different donors and organizations do loan guarantees at all different rates, all different structures. But we also have my neighbors up the street, OPIC, that have political insurance. That's a really interesting product. MIGA also has a similar product out there. You have lots of different central banks, actually, I've seen in Africa, some more successfully than others, but are trying to do different types of partial risk guarantees through the World Bank's model and trying to put different risk mitigants in place. One thing, actually, I just had a conversation with somebody yesterday about this, but trying to encourage more of off-taker agreements and contracts we put in place that can also serve as different risk mitigants. But I think from what I see, the name of the game in getting energy more scalable is proving that this is not as high risk as maybe the initial investors might think it is. And as a part of that is making sure you're covering your risk appropriately so you can sell what you're doing. But that's just kind of what I've seen so far in West Africa as far as that goes.
Super. Thanks so much. And just so everyone knows, we're going to structure the session, and I believe most of the sessions are structured this way, so that we have about half of the time for initial comments and then half the time for questions. So please be jotting down any questions that you have, and as soon as Carl has a chance to speak, we'll go around and start addressing them. So Carl, I know you've been doing a lot of thinking lately in this space, and well, as evidenced by the program, there's a proliferation of different business models out there, payment schemes. We're seeing, of course, the old model of just being traditional donors and private sector is completely outdated. We've got all sorts of different financial flows from angel investors, social impact investors, donors that now include lots of different foundations. So it's quite a complex space, and I was wondering, you've got your feet on the ground, what do you sense is the most interest at this moment? What's generating a lot of excitement in the investor community in this space, and what are you following?
Well, I'm going to try to twist that because I think that what concerns me is what's not attracting a lot of interest.
Mm-hmm.
And I think I'm one of, and probably the oldest person in the room. So I'm going to go back and be a bit historical. We've been here before. In 1933, in the United States, my father worked in rural electrification, so I come by, this is at least the family myth about rural electrification in the United States. I'm not actually a scholar of the history. But 95% of rural Americans did not have electricity in 1933. 85% of rural Americans had telephony. And the reason for that was quite simple. Telephones were low capex. These were naked 12-volt copper wires on fence posts, rural party lines. And electricity was 3-pin, 120-volt, high capex stuff. And farmers couldn't get credit. Had nothing to do with farmers' ability to pay. Had entirely to do with farmers' ability to borrow. And what happened was the Roosevelt administration simply decided to flood the space with liquidity by declaring that rural electrification was a quasi-public good, that it would generate so many public benefits that even if individual farmers or individual co-ops defaulted, it didn't matter because the economy would benefit from the act of electrification, which in fact it did, because without that electrification, we would have lost World War II, because we would not have been able to maintain the flow of food off the farms when we took all of the men and sent them to Europe and Asia. So we've been down this pathway where telephones lead, and it's important to remember how the problem was solved. The problem was not solved, as my father would say to me. He said, look, he was a lawyer, and he would go to help a rural co-op in North Dakota. He said, you had 45 first-generation Scandinavian immigrants who grew wheat. They did not know anything about electricity. They did not know anything about finance. And they had all been in bankruptcy within the past 3 years. So they had absolutely negative credit histories. In spite of that fact, the United States government made money on the effort because rural electrification generates such economic value that you cannot think of it as a private good where you're going to say, okay, is this farmer, is this family creditworthy? Second thing I want to point out is that it's understandable that when you try to finish the job of electrifying countries where 60% of the households have a wire and 40% don't, that you sort of start thinking from the grid out. But I think that's actually going to kill the space, because what you have in most of these countries with large off-grid populations is not the kind of grid that we experience here. Mm-hmm. You have something that's much more like what the Russians used to say, which is they pretend to pay us and we pretend to work. And in many of these countries, the distribution companies pretend to provide electricity, and the people who get electricity pretend to be customers. But in fact, you have such a fundamentally dysfunctional relationship that trying to build out from that to finish the job is simply not going to work. And my third observation is that we have to remember one very important thing. There is, to my knowledge, no substantial society which has completed the task of electrification by having the bottom income quintile pay commercial rates for the capital costs of whatever form of electricity they got. You cannot finance this with commercial capital. It has never been done. There is no reason to think it can ever be done. So the task that faces the collective we is to create the liquidity, a virtuous culture which is not based on the culture of the grid in these countries, and an understanding that you have to have low-cost capital to pay for the debt part of the portion. If you do those three things, there will be probably hundreds of business models, of which a dozen will turn out to actually work in different places, and it won't be the same everywhere. But if we keep focusing on the details of the business model, the relationship between the bank, the developer, and the customer, and we ignore this larger context, we will never get the job done.
So what does that larger context look like? Because I think for many of us, the default to go to the enterprise level is that it's a manageable entity that we can control, we can work with. Is this a international framework you're talking about? Is it the national level? what is a structure, and if you want, you can talk about it in the context of setting up a fund. How do you deliver the right type of capital, the right cost of capital, the right tenor of capital to these entities? How do you structure such a thing that you're describing?
Well, you have to start with somebody wanting to own the problem, and I actually think that's the fundamental problem. Nobody thinks this is their responsibility. Nobody who has a bank account. You don't even need a very large bank account, by the way. You don't need a $100 billion bank account, but you probably need a $10 billion bank account to own this problem. And nobody with a $10 billion bank account has said, it's ours. Because, in fact, these customers, as you all know, can pay. They just can't finance. They're already paying. And in almost every one of these countries, there may be a few exceptions in Africa and the Caribbean, but with the exception of a few countries, all of these governments have demonstrated examples of flooding the bottom of the pyramid with liquidity. They do something that gets lots of assets into the hands of people in these places. So they know how to do it. They simply haven't decided that electricity is one of the things that gets priority. I mean, in India, for example, if you are a very large part of the rural population, you get a little card that has 12 little things on it that enable you to get subsidized kerosene. With the value of, if the subsidized kerosene is actually available in your village in July, which it might or might not be, about 2/3 of the time it isn't. But if you took those 12 coupons and you could cash them in at once, you could get a home solar system. So the money's there, but nobody's actually said solving the problem is our job. Nobody has actually said, we're going to solve this problem. So I actually think we need somebody to own the problem. And there is, I mean, I've spent a lot of time dealing with, people like the World Bank. And they say, that's not the kind of problem we solve. You go to various national governments who really should do this. These are their populations. And they say, that's not our priority. So I think what's really needed here is to combine the energy of the people in this room and around the world. And there are hundreds of people putting up their own equity to solve this problem from the bottom up. But they don't have a context in which the sector is liquid. Let's look at why solar cells cost what they do today. We're all very thrilled by the progress we've made in the cost of solar cells. Solar cells became below $1 a watt because the Chinese government flooded the manufacturing sector with liquidity. Lots of the companies make crappy products. Many of the companies will go bankrupt. But the social asset of cheap solar power was created actually almost exclusively by the government of China and by a liquidity-oriented solution. So we need for somebody big to step forward and say, we're going to own this problem, we're going to provide the liquidity, and then it will be important for people like the people in this room to play, I think, by 3 rules. Because if you really want to take advantage of the liquidity, you have to do 3 things. And that's something that each enterprise controls at the enterprise level. 1, you need to create a culture of payment. And a culture of payment cannot be assumed in the electricity sector in most of these places. You need to figure out how your business model gives your customers an incentive to pay you back, whatever they agree to pay. Second, we need to create an expectation of reliability. The biggest reason people don't pay distribution companies in the third world is because distribution companies don't deliver reliable electricity. So reliability, that means product quality, and that means servicing, and that means warranties, is absolutely critical. And that is a place where very discrete de-risking products can be important, because we need to make it possible for developers in Tanzania to know that there's somebody where they can get solar panels and somebody else stands behind the solar panel. So they don't have to try to go into a Chinese or an Indian court to collect if somebody actually sends them a bunch of junk. And third, you have to set up your enterprise so it's open to liquidity. You have to be able to take advantages of a variety of possible financing mechanisms. Because if you get yourself too niched and you're operating in a country where the finance minister wakes up on Tuesday morning with vision and makes a commitment, and you were focused here and they make a commitment over here, you'll miss the boat. So you've got to have flexible openness to liquidity. And with those three things, and then enough pressure from the rest of us and from the UN to say this has got to get done, I think we can make it happen.
Terrific.
Well done.
Okay, I think that's a great place to launch into some questions from the audience. I think we're going to try to bring a microphone around. If you wouldn't mind, just introduce yourself, please, what organization you're from, and then direct your question at one of the panelists.
Hey, Jeff, as you said in your opening panel, you said we need lots of new ideas. And most new ideas come from small companies. They don't come from utilities. They don't come from government. As Megan was talking about, you were talking about big money, and we definitely need big money, but we also need numbers that are lower than $1 million, because most of the new ideas coming from small companies, $1 million is between 5,000 and 20,000 houses electrified. And it would be irresponsible for someone running a new idea to start off with between 5,000 and 20,000 houses. So is there a role for aid in supporting those new ideas, getting through the valley of death to the point where they can access $1 million credit facility and the $100,000 a year that it takes for the bureaucracy to manage the the compliance issues and the reporting and that kind of thing?
I should maybe have started by saying about 80% of our portfolio is the missing middle. About most of that $3 billion facility that we have are structured in the form of loan portfolio guarantees, or we might work with one bank, say EcoBank. Actually, this is an example that I didn't share. We have a facility with them where it's a $5 million facility, and they then have to lend under $50,000. And so most of our facilities that we have globally are targeting that missing middle, the SME market. That's most of what we do. The ones I flagged are just ones that I think are a little bit more creative that we don't typically do. But most of what we do is that. And so, for example, I'll go meet with a bank, and the bank says, our entire portfolio is greater than $500,000 investments in large corporates, utilities. The only thing we do in the energy sector is oil and gas. And so then I'll go walk over, and I'm just saying what I did with this EcoBank I was working with. I just then walked over and said to their SME department under the domestic banking, what is your portfolio for SMEs in renewable energy? And they said nothing. I said, okay, well, that's where we want to start. So most of what we do is in that space. And so how our product works, which is why it's good to partner with others who know this as well, is we would find a financial institution that's interested in the space. So some of you in the room as well, Acumen, actually this is what we have with you all, and they would be the financial institution providing the debt, and most of that is in that smaller size. That's most of what we do.
But most of those banks or institutions won't touch new ideas. They'll fund something that's already been done 100 times already, but they won't touch a new partner trying a new prepayment technology in a new country.
Exactly.
And maybe
that's
touch on that a little bit.
Exactly.
We have, I think I mentioned it briefly, 2 programs at USAID that are specifically geared towards that, to very early stage seed grant money for new ideas, much further upstream than we typically ever would have done in terms of new technology development. And one is the Development Innovation Ventures. That is cross-sectoral, but I would think almost half of their portfolio is in the energy sector. And the other is the Powering Agriculture Any Grand Challenge that I mentioned, which is focused specifically at the nexus between energy and agriculture, but trying to provide some of that early stage capital, which we hear so often is a challenge, in sizes that are appropriate for startup companies. Now, let me caveat that by saying the bureaucracy you mentioned that you're waiting for, you're substituting with another bureaucracy, and that's USAID bureaucracy. So I'm not convinced that a large donor, whether it's AFDB or us, giving out small capital grants to companies is the most efficient and best model. And I think one of the things we need to brainstorm here is, what is the right model? What's the right intermediary that can effectively meet the needs of the small entrepreneur with the right flavors of capital to meet the demands of that entrepreneur as they go from very early stage on to pre-commercial to commercial. And I don't think we've got a framework, as you said yet, Carl, to address that in most countries. Okay, any other questions? And don't forget to please introduce yourself if you wouldn't mind.
Hi, my name is Ryan Levinson with Sunfunder. Hi, Carl. This is a question for you. My question is, you mentioned that you don't think rural electrification can be solved by commercially oriented capital. And you gave a great example about China and how they flooded the market for solar panels with liquidity. But another side of what happened with the solar panel market is the demand that was created in Europe and the US for those solar panels. And there was a lot of commercially oriented capital that was a big part of financing those projects. So my question is, for rural electrification, what role could commercially oriented capital play?
Well, I didn't say commercially oriented capital couldn't play a role. I said commercially priced capital. These are high interest rate environments. These are high exchange rate risk markets. And if you don't de-risk those two things, if you could get money into these things at 5 and 6%, which is good yield in the West, but it's not good yield in India or Pakistan. So I think it absolutely must be, it is almost certainly going to be commercially oriented capital. But that commercially oriented capital needs to be de-risked, as in fact what you cited was. I mean, the thing that was interesting about Germany and Spain was that German solar developers did not have to worry about the cost of coal-fired power competing with them. They had a ring-fenced market. And it was that ring-fenced market which enabled them to buy those liquidity-subsidized Chinese panels. So I think it is going to be commercially oriented, but we need to be realistic. At 15%, a 100% CapEx energy source is not affordable by the bottom quintile in sub-Saharan Africa. That's just not real. So we've got to get the interest rates down, the effective interest rates down into a reasonable range. But then it should be commercial. I mean, I'm actually completely a believer that this is not probably going to be done by the governments. The governments have had 40 years. The governments have done what they're going to do.
Thanks. Nice clarification.
Yeah, my name is Willem Nolens from Solar Now in Uganda. When you say the bottom of the pyramid is not, cannot afford to pay commercial interest rates, even not non-de-risked commercial interest rates, I would love to look at the example of microfinance, where the poorest of the poor are able to pay 100% and more. And, it's about access, not about pricing.
Well, I think that's directed to me, so I'll say that it is definitely about access, but 100%, microfinance has yet to reach 100% of any bottom quintile. I didn't say there are not people. And for example, let's take somebody who has an opportunity to irrigate using solar drip irrigation and solar pumping. They probably can't afford 15, 20% interest rates because they're going to be generating an income stream from it. On the other hand, if you're talking about somebody who needs a light so their child can study, where the payoff is going to be 25 or 30 years down the road, they probably are not going to be able to afford those kinds of interest rates. So it's the universality that I don't think you can get unless you de-risk the capital. It's not that there aren't customers. It's not that you can't build businesses in those environments, but you can't finish the job of electrification as long as we haven't really provided affordable liquidity. That's never happened anywhere so far. It could happen, but as the old guy in the room, I'm looking back at what's happened in the past, and maybe that's limiting my vision.
I think maybe we'll take 2 more questions. We have about 15 minutes, but we might end a bit early. So,
Hi, I'm Ron Kastner. I'm an ARC board member. For Mr. Pope as well. What size are you envisioning here? It seems to me that you're pointing a finger at a bigger, more centralized sort of structure, that would power generation that would be, more appropriate for a village or something like that, which comes with a lot more capex than what a lot of people in this room are talking about?
No, I'm actually, that is not actually what I was referring to. I'm actually, I mean, I've done a little bit of model building, and other people have done a little bit of model building, and I actually think that the UN's figures, if you actually say, okay, what's it going to cost to do the part of this that will be microgrid and off-grid, and if you actually decide that making the microgrids grid tieable is not a top priority, that we can afford to build out direct current microgrids, I think you can do the global job for relatively modest sums of money. Probably if you had $10 billion of liquidity in the sector, I think the sector could get the job done in 10 years. So I don't think it's but that's a much larger sum of money than anybody's provided so far. But it's not anything like the full energy services bill for the third world, which that's then the next generation. And that's going to be much larger. But then you have people who actually are generating money and can afford to pay it.
And a question up front here, Chin.
Thanks. Rachenda Van Loon from the UN Foundation. A comment, really, more than a question. I'm just back from Patna, Bihar in India with several of the others in the audience today. And one of the things that we've seen there is it's as much tactics as it is strategy. And I think perhaps we as entrepreneurs and as people operating energy service companies are not necessarily the best people to go and be talking to the bankers. And there are loan products in India right now where the banks are actually required to lend at 4%. The problem is that they don't necessarily advertise those loan products. And so the companies don't know about them. And the other side of the equation is the bankers are not necessarily comfortable with doing that lending. So there's also very much a banker-to-banker kind of knowledge transfer. And I mean, I want to thank ARC Finance for the work that they're doing here, looking at exploring these things. But I think globally, one of the benefits for the whole initiative would be, maybe this is something that USAID could also help with more broadly, is doing this banker-to-banker peer training, because we don't all speak banker speak. And I think there are loan products, that, as I said, that do exist, certainly in India, perhaps not always so well developed in other countries, but we should be looking at that banker training rather than necessarily just the interaction between the entrepreneur and the banker.
Yeah, just to jump in there, that's such a good point. We did something really similar in West Africa. Within the agriculture sector, I saw a lot of the same problems within a certain bank happening where they weren't actually talking to each other. And they were supposed to be decreasing their interest rates because we were providing a risk mitigant in there, and they weren't actually having that conversation. So I said, okay, let's just do this. And so I got a couple of the bankers together who were fantastic and who got it, and I helped them train their own other bankers. And it's really interesting now, that was a year ago, it was last October, that we had that training. And it's interesting now to watch, it was with 12 different subsidiaries of the same bank, watch now over the year, about a half of them, maybe that's good, maybe that's bad, I don't know, but about half of them now, I've seen them actually go back, and now they are decreasing that interest rate as they were supposed to on their model. So it's really interesting you say that, because it would have been years of over and over we're trying to explain this from USAID's perspective, but it actually needed that Francophone West African banker to train the other Francophone West African banker and say, no, this is how you do it. Yeah, you really can do that within our West Africa. Some of the bankers were saying, no, the central bank doesn't allow us, and it was really interesting from my perspective. I think that's a really good idea. We should think about that for energy as well. Yeah.
I think it's a fantastic point, Rachenda. We're actually running a full-day event at the Microcredit Summit, which is going to be in Manila in the Philippines in early October, where we're trying to initiate exactly that conversation. In this case, it's microcredit banks, microfinance banks. And so the idea is to put together in a room a number of leading microfinance practitioners that have had early successes, and to encourage others that we think are, kind of watching from the sidelines, to really start to shift people's thinking and to understand that perhaps this is less risky than they thought, and to name the risks the perceived risks, to see whether those really are as scary as they seem, or whether in fact there are ways to deal with them. So I think those conversations are beginning to happen. I think others are probably encouraging those kinds of conversations in their own networks as well. Are there other questions before we move to a break?
Carl's an old acquaintance of mine, and so I love your history, but I'm not. There's some nuances here that I'm not sure I agree with. So let's take the village level, where for less than $50,000, you could put in combined solar, micro turbines, some storage capacity, and you'd provide these energy services. And the word energy services, I think, is very smart, which would be a couple of pumps that would be deep in the earth, a couple hundred feet. The water, therefore, would be clean, wouldn't be an open well. So the cow shit, and worse, doesn't get into the well. So that provides some water for irrigation, clean water. You recharge cell batteries. So you've got two pretty powerful incomes that come from those. You provide electricity for a very highly efficient refrigerator to keep medicines there. So you have health care. People will pay for that, but the amount of electricity is going to be used for that is minimal. LED lights, kids get an extra couple hours of school at night, and they're given some sort of very inexpensive computers. It's not very expensive. So what's the problem? The problem is a lack of entrepreneurial leadership and creativity on the part of the bankers. I'm a banker, and I'm the first one to jump all over our sector. We're not being very imaginative about this. And great to flood Kenya or Uganda or Tanzania with liquidity. This problem, I think, is solvable if you can get some good financial and national and, get USAID, AID, KFW, OPIC, all to work together. The problem is solvable. Now, argue with me.
During the break.
I completely agree the problem is solvable. And I think that models like the one you talk about, where you start out with the node where there's the highest value electron and you add the highest value electron first, makes tons and tons of sense. But having dealt with a number of the people in this room and people like them in other places, I can tell you that you may think that it's easy to get $50,000 to do that in a village in Orissa, but it's not. And maybe it should be, because the government of India, in fact, has made some mandates for the rural banks. But if the guy in Bhubaneswar just doesn't trust the sector and doesn't think he has to, then really quite remarkable people get stuck. And if we're going to do this fast, there isn't entrepreneurial energy in every single village in Senegal. I think there's enough entrepreneurial energy in Senegal writ large that if somebody can go into one village, be successful, and spread because the context is there, this problem can be solved. I said with a line of credit worth $10 billion, I think this problem could be solved in a decade. So I'm very much a believer it can be solved, and I think you've articulated a strategy. But as Richenda says, there's also the execution of the strategy, which she called tactics. And there's the understanding on the part of, look, the government of Kenya announced they wanted to be the first country in the world to get kerosene free. That was fantastic. Last week they announced a 16% tariff on all imported renewable energy products. The government of India has this big Jawaharlal Nehru National Solar Mission. Entrepreneurs in the largest single off-grid market in the world, which is Uttar Pradesh, just had to spend about half of their time for 3 months heading off a proposal to require the regulation of the rates charged by microgrids. So the context is not really where it needs to be to support entrepreneurship. But I agree with you, the job can be done. And I agree with you, the entrepreneurship is there to do it. But I don't think the context is supporting that entrepreneurship.
Great. Well, I think we've got some good themes that will probably wind throughout the day. So thank you so much, Megan, Maarten, Carl.
Thanks.